And good afternoon. Welcome into Market Talk on this Tuesday, May 10th. Great to have you with us once again. Thanks for joining us, making us part of your day. I'm your host, Jesse Allen. Find us online, markettalkag.com. That's our home on the web. You can find all of our streaming sources, radio affiliates there, and much more. We have plenty to talk about in the market trade today as we saw green numbers on the screen, a nice little recovery from what we saw yesterday. Plenty to discuss. Let's bring in our good friend Brian Splitt with agmarket.net joining us today. Brian, good afternoon to you, sir. How are you?
I am doing just fine, Jesse. Thank you for having me once again.
I appreciate the time, my friend. Let's jump right into these markets. We've had a lot of headwinds out there, a lot of concerns, with the macro side and everything else. And today we came back and found a little bit of buying. I was worried there after the open of trade this morning. I thought maybe we were going to fade a little bit, but we held up fairly firm today with corn, soybeans, and wheat. Talk about just in general what you saw with the market trade today. Anything stand out to you?
Yeah, buying came in a little bit late today. They did try to stuff the open. Things were higher overnight after the planting progress numbers came out yesterday afternoon. And I think when you look at the December corn chart, for example, we had a major kind of a spike low the day after Russia invaded Ukraine. So we were up sharply that night. Then came back off the highs by morning. And then the next session after that, we were down near the limit, and that was a Friday. We came out of that weekend and took off. Then we had another spike lower. We were nearly limit down for part of that trade. That was March 29th. And that was when we had reports of Russia pulling troops out of Kiev. And so that was kind of another, is the war, winding down? And again, that was just a spike low. And then we went up to make new contract highs after that. So if you look at those two major spike lows and draw the uptrend from them, that's going to come in just above $7 here. So we got to 703 3/4 yesterday on the low, 707.5 for today's low. So the market, pulled back on a forecast of some better planting weather. We are getting some crop in the ground somewhere or in some areas, but there are other areas. A couple producers in North Dakota I talked to today still haven't turned a wheel. And so there's still going to be concerns about planting. We are delayed. We're behind all the averages as far as where our progress should be. And I think that's got people willing to come back in here and buy the dip here against some good trend line support. Then you've got other markets like wheat. You've got 100-degree temperatures in Texas. You've got spring wheat that's not getting in the ground, and that's in North Dakota and in Canada. They're having difficulties as well. Some talk about France, dry weather there. Back to corn in France, they're going to be looking at probably a 5% lower planted acres because of fertilizer costs. So it seems to me like the story for grains is not over yet. Just a little bit of profit taking that started at the end of the month. And then we're going to be moving into the report that we have on Thursday, and we'll get the first set of new crop balance sheets from the USDA there.
Do you think heading into that report, so you led me right into what my next question was going to be, do you feel like unless barring some sort of unforeseen circumstance, say pressure from the outside markets or anything, do you feel like the trade might chop around a little bit here heading into that report just as traders kind of line up and obviously everyone kind of watches to wait and see if there are any surprises on Thursday's report, Brian?
Yeah, again, with that uptrend down there on new crop corn, I don't think we're going to see the other side of $7 prior to that report, unless, like you said, there's some major event going on in the outside markets. The stock market's been very active lately, and that's been providing some macro influence. But I tend to think that you're going to have some support in the low sevens. You're probably going to find some resistance in the maybe the low to mid 730s on new crop if we continue this bounce into the report. My concern for the report itself, and this is relative to corn, would be that we are seeing some of the private analysts out there have their yield estimate for new crop below trend. And maybe that's what you think it is right now, and I'm not going to argue with that, but that's not what the USDA is going to show us. The May report will use the planting intentions number for the acres, and they're going to use the trend line yield that they had on the February outlook for them. And so you think back to like 2019, we were flooded everywhere. Big concern about planting delays in 2019, worse than this year. And they still had a trend line yield on their first new crop balance sheet in the May report. Now in June, they did drop it, and they dropped it from trend and went 10 under trend on the June report. And maybe that comes to fruition next month. But I think that's where we're set up for maybe a little bit of a bearish reaction to the report, because I think some of these estimates of below 181 on yield are not where the USDA is going to be. Now, I think if we get a bearish reaction from that report, they will step in and buy that, whether it's that day or maybe a day or two afterwards. And I think that'd be a really good buying opportunity. But that might cause a little bit of these production estimates to be too low compared to where the USDA is.
Well, and you mentioned earlier some of the planting delays in the northern plains. There's whispers of prevented plant already up there, and we don't want to hear that. But you see something like that thrown into this market where we really can't afford to give up those acres and give up that production. It feels like it could set us up for some fireworks. So it has me thinking that even during a busy time right now, that farmers have to remain vigilant and stay on top of what's going on with these markets, just with everything swirling around them, Brian.
Yeah, I mean, it's hard because producers have been sidelined for so long, and they're finally getting out there at it. And our phone has been very slow today and yesterday, and producers have other things on their mind right now. But just don't ignore the market. Keep an eye on it. I feel like part of the sentiment from the producer right now is we're above $7 corn. We're well above our break-even levels. And we've got room for this market to go down and still be in very good shape. So I think that's a sense of comfort for the producer right now as they're getting the crop in the field. Is, hey, we're holding 7. We're only 50 cents, or after today's move, only 40 cents off of contract highs. And we've seen these 40 to 50 cent setbacks multiple times through this uptrend just to catch again and go make new highs. And you'd mentioned the concerns about planting and prevent plant acres up north. We need these acres, and we need a trend line yield just to keep the balance sheet somewhat static year over year. So another place where the USDA could surprise is their first assessment of demand. And maybe they show a little bit lower demand than what we think could be shown. And they could probably justify that based on the prices on the futures board right now.
Very true. Brian, let's move over to livestock here quick. Cattle and hogs tried to trade higher immediately today and then just faded. And I know we had pressure, triple-digit losses in some cattle futures. Hogs had a couple green numbers on the screen, but really just feels like these livestock markets, the stock markets hit them the last couple of days. There's been some consolidation, it feels like. Any thoughts stand out to you in cattle or hogs here as we work into this week?
Yeah, we've definitely seen some long liquidation from the funds in our four-legged critter futures. And, it's been a very well advertised head and shoulder top on the June lean hog contract. We still haven't quite yet gotten to what that pattern would measure to. It would be maybe in that 97, 98 zone. We've come very close to it. So this market's very oversold. It's probably bid off enough where I'm not really excited about maintaining shorts, but I don't know if I want to go long quite yet on the hogs, but I do think that come expiration will be higher than where we are right now. But you're right. I think some of the outside market pressures coming from the stock market is causing some pressure on the live cattle. Feeder cattle under pressure today with a little bit of a recovery in corn. And also, again, you look at these hot temperatures, demand for feeders in Texas with the hot temperatures and lack of water and feed prices is still causing some poor demand for feeders down there. So it's one of those things where the market is still holding support in all of it, on the feeder side and on the live cattle side. But we just haven't really been able to get that good push back up to the highs here. I still remain friendly the December and the February live cattle contracts. Again, we're kind of testing some of these uptrends, and hopefully they hold and we get the stock market to give us a bounce. And I think if it does, you'll see the cattle market bounce with it.
Well, I think as well as we get more into summer grilling season, one has to hope that maybe some demand will pick up on the consumer side. Obviously, I know there's concern about export demand just with China and lockdowns there. I know the COVID lockdowns are weighing on a lot of aspects of our market trade right now, Brian, but hopefully summer grilling season can maybe give us a little bit of a bump here in demand and in turn help out and give us some support in cattle and hog markets.
Yeah, I think a lot of the sentiment from China's lockdowns, you would generally think hogs, right? But there's been a growing segment of their population that has also gotten a taste for that fatty white beef, and they use it in Mongolian style barbecue. And so when you've got Shanghai, and what a weird scenario where you've got their numbers improving, yet their lockdowns are getting more strict. And I just, my thought is, geez, are you just trying to get inflation under control through these lockdowns, or what's really the story over there? But these Chinese lockdowns are putting pressure on both pork and beef, and so I think that's been another element of the pressure that we've seen here lately. But I think it's positive that this market, from the energy side of things, has been able to hold support around 100 and maintain these uptrends regardless of these Chinese lockdowns. So if we can see them open back up, I think energy values will spike again.
Well, Brian, I know we covered a lot in a short amount of time, and I know you have a tight window today. Any final thoughts you have for us here on this Tuesday, sir?
Just generally, it's going to be the same thought process as always. Just, try to get some coverage here. We've been doing a lot of, when we were in that 735, 740 area on new crop, it was doing a lot of doing HTAs and then maybe spending 35 cents on an $8 August short dated call. When you do the math, it just gives you a net $7 worst case on the futures board. And you've got all the upside open in the world here if there's something crazy that happens with weather this summer. Short dated puts are a really good way to put a floor in a market for some of these specific events. So if you want to have a floor at the uptrend for the next month or so, a July short dated put at $7 would be a good way to protect the chart.
Well, Brian, I know if folks need a little advice with their marketing, they can reach out to you and the team there at agmarket.net very easily. You guys have the website, a phone call, of course, or downloading the app on the App Store, can't they?
Yeah, that's right. So 844-424-6758 is the general agmarket.net line. You can reach me directly at 815-665-0463. And the website is www.agmarket.net.
Brian, we appreciate the time as always, sir. Thanks for joining us on this Tuesday. Have a great rest of your week, and we'll talk to you again soon.
Okay, thanks, Jesse. Appreciate it.
Brian Splitt with agmarket.net joining us today here on Market Talk. That's going to do it for the show on this Tuesday, May 10th. Find us, markettalkag.com. I'm Jesse Allen. Have a great afternoon.